There are 3 million people in the UK whose incomes have been destroyed by coronavirus but have been left out of the government's support schemes. They've gone 8 months with little or no income at all. No salary, no furlough, no self-employment support, no discretionary grant from local authorities, and no benefits. For many, not even universal credit. They're known as the excluded, and they come from all walks of life. Despite what ministers say, they're average workers on modest wages. They're tradesmen and women, freelance designers, private teachers, musicians, actors, TV production crew, and much, much more. Many of them are people putting the pieces of their lives together after a major change, trauma such as bereavement, divorce, redundancy, or leaving the armed forces. Cruelly, for many, it is that change in circumstance which has ruled them out from government support when arguably they need it most. The Prime Minister and Chancellor want you to think that they've put their arms around every worker. They might even believe it themselves, but they simply haven't. 1 in 10 working people in the UK has been left out of their support schemes, and the human and economic cost will be enormous. There are too many falsehoods and misunderstandings out there about the excluded, so I want to do what I can to clear that up by explaining each group of excluded people, the specific rule that has led to their exclusion, and specific things that the Chancellor and the Treasury can do to fix these gaps in support. It's crucial that politicians and the public understand the excluded are not the wealthy and they're not a tiny minority. They are your friends and your family. They're normal people in normal jobs who are unlucky enough to have fallen through a crack in support that the government has chosen not to fix. The first group are those who have been left out because of the 50% income rule in the Self-Employment Income Support Scheme. This is 1.2 million people. This rule said that to be eligible for the Self-Employment Support Scheme, your self-employment income had to be over 50% of your total income for the past 3 years. This rule was meant to prevent double support for people with 2 or more jobs at the same time at the start of the pandemic. However, this rule has ended up penalising people who have had 2 or more sources of income, one after the other, over the past 3 years. Right now, the self-employment scheme criteria treat one-off income from up to 3 years ago with the same level of importance as income from a week or 2 before the lockdown, which means if you received a lump sum of a few £1,000s a very long time ago, that could rule you out from receiving any support for the entirety of the pandemic. People are being penalised for money they received 3 years ago, even if it was a lump sum and had nothing to do with their salary. This rule has ended up penalising very low earners who have drawn down their pension as a lump sum or who work to top up their pension. This group disproportionately includes widows and widowers and disabled veterans. This rule also punishes anyone who went from a higher paid role into a lower paid role, including into self-employment. Here's some ways that Rishi could fix this. First of all, just drop the 50% requirement completely. There is no equivalent in the furlough scheme, and the costs can be controlled already by the £2,500 a month income cap from the furlough scheme or the existing caps and support in the self-employment support scheme. Failing that, HMRC should update the criteria to disregard certain types of income from this calculation so that your pension shouldn't be included, and neither should lump sums such as PPI, inheritance, bereavement, divorce or redundancy. Alternatively, the Treasury could update the formula to give greater weight to recent income and lesser weight to income or lump sums from up to 3 years ago. For example, historical income could be discounted by 5 percentage points for each calendar month that's passed since it was first received. Take, for example, a £5,000 lump sum received 18 months ago. Could be PPI, could be redundancy, could be injury, could be anything. 18 months at 5 percentage points per month is 90 percentage points, which means that for the purposes of the calculation, a £5,000 lump sum 18 months ago would be treated as £500 of income. The next group is around 225,000 people, and that's those who have received no self-employment support because they earn over £50,000 in profits. The £50,000 profit cap is meant to target government support at low earners. Now, I can understand back when the lockdown first began and it was expected to last for a couple of months, that high earners could be expected to have a cushion to see them through. But no one has a rainy day fund that lasts 8, 10 or 12 months, and this rule is no longer fit for purpose. So here's some things that I think the Treasury can do. First of all, just strike the rule out entirely. The costs are already controlled by the £2,500 a month limit in the furlough scheme. or by the limits on each of the self-employment income support grants, so just remove the cap. Failing that, increase the £50,000 limit to £100,000. Of all the people who earn more than £50,000 a year and are therefore excluded from this scheme, half of them earn below £100,000 and the majority of them are very close to the £50,000 threshold already. Increase the cap and we will offer support to those who need it most effectively. Failing that, we should convert the £50,000 threshold from being a sharp cliff edge to a tapered threshold, or for example, for every pound over the 50,000 that a self-employed person has earned, we take 2.5 pence of the 2,500 that they would otherwise be entitled to. The next group is the newly self-employed, which is around 200,000 people. HMRC, back when the lockdown began in March and April, had real difficulty in verifying the records of people who had not submitted a 2018-19 self-assessment. First of all, we should be totally clear about the financial years here. The 18-19 financial year finished over 11.5 months before the lockdown began. The 19-20 financial year mostly took part before the lockdown and the pandemic. Of that entire financial year, only 9 working days were affected by the lockdown. And the 2021 financial year is the financial year we're in right now, and that's the one that has been most affected. Now, the government based eligibility on the self-employment support scheme on the 18-19 financial year, which ended almost a year before the pandemic began. The government chose that year because they had information about that year. The deadline for submitting 18-19 assessments had already passed, so the government had reliable information. At the time, 19-20 self-assessments simply didn't exist. People could begin to send them in a few days after the lockdown began, but they actually have until the 31st of January 2021 to submit them. 8 months ago, that was the harsh reality for self-employed people. But now, all this time later, there's several things the Treasury can do to support people who have not submitted an 18-19 self-assessment. It should have done these things months ago, but better late than never. First of all, HMRC should launch an aggressive promotional campaign encouraging sole traders and self-employed people to submit their 19-20 self-assessment as soon as possible. Then, HMRC should automatically contact any sole trader or self-employed person who submits the 19-20 self-assessment, who has a unique taxpayer reference or company registration that predates the lockdown, so it existed before the 23rd of March 2020. HMRC already has this information on their systems, and HMRC should contact people who have submitted their first self-assessment to explain to them their new entitlements under the self-employment support scheme. To mitigate the risk of fraud, HMRC can implement the same security checks that it placed on its late submission period for the 2018-19 self-assessments in April 2020. And to further mitigate the risk of fraud, HMRC can use the existing information it already has about taxpayers and their history of tax payments to verify wherever possible that they have a track record of paying tax and that their income is affected by the lockdown. This scheme, like all the other ones, must be backdated to the start of the lockdown to ensure a level playing field for all self-employed people and small businesses in the UK from 2021 onwards. The next group is limited company directors, roughly 710,000 people. Now, the task here is to differentiate between dividends that small company directors pay to themselves as a replacement for pay or to manage their cash flow, to differentiate that from dividends paid to passive shareholders who do not actively contribute to the business. Now, the government has said that this is not possible, but it is. That information is already kept in a differentiated form by Companies House, and it's a matter of public record in many cases, so the information is available. So Rishi should set up an urgent task force right now of the digital teams of both HMRC and Companies House, tasked with finding a way of developing an interface between their two databases that allows them to associate reliable taxpayer information with the reliable dividend information held by Companies House. Once that information is available, HMRC should be able to calculate the average monthly income received by limited company directors from their company and update either the furlough scheme or the self-employment income support scheme accordingly. The next group is 100,000 people who are simply denied furlough by their employer. They may have just left in a couple of days before the lockdown started, and it's perfectly legal and has no cost for the previous employer to take them back on and put them on the furlough scheme, but for one reason or another, that company said no. Now, what Rishi needs to do here is simply remove the discretion of companies to say no without giving good reason. To incentivize this, any company that denies furlough to an employee for no good reason should be ineligible for the job retention bonus when that's finally rolled out. And HMRC should set up an appeal scheme so that any company with a legitimate reason for denying furlough is able to make their case and have that accepted. Another group of 300,000 people are the pay-as-you-earn freelancers, people who, due to technicalities in their employment contracts or having lots of different contracts in a row with different employers, have fallen through the cracks between the two schemes. The abolition of the 50% rule that I've mentioned earlier and the prevention of companies from denying furlough to their employees should hopefully address the problem that most of the PAYE freelancers have. Next are the people excluded because they pay themselves annually. Now, these are usually small businessmen and women who pay themselves right at the end of the financial year, because that's the only way that they can manage the costs and the cash flow of their business. And they would have submitted their payment information to the Treasury just in the few days before April 5th, the end of the financial year. Now, unfortunately, that's exactly when lockdown started, and the cut-off date for the furlough scheme was before many people sent in their annual PAYE, which meant they were not eligible for any scheme. To fix this, Rishi and the Treasury should open a new application scheme which accepts the applications that would have been made in that period, backed up by a letter of verification from the accountants or auditors of that firm. To take even more risk out of this, Treasury can look through the tax-paying records of that individual for the past 1 or 2 or 3 years, where quite often they will see that this is a repeating pattern. This is a legitimate pattern of business and not an attempt at fraud. The next group is quite a broad one, and that's young businesses. Right now, the self-employment support criteria looks at the inevitable and necessary setup costs of a new business or a new venture and puts those in the exact same category as business losses. This just isn't economically sensible. To fix this, Rishi could allow businesses that are in their first 3 years of operation, which is verifiable by HMRC records or company house records already, to disregard either a set period of time or a set amount of money from the calculations to reflect the fact that those losses were actually startup and setup costs. For example, a fledgling sole trader could be allowed to discount £5,000 or £2,500 of setup costs and equipment costs from their self-employment support scheme calculations, or could be allowed to disregard losses made in the first 3 or 6 or 9 months of their trading. As well as these specific proposals, there's a few general steps that Rishi and the Treasury should really take to improve the coronavirus support schemes that they have. As a general fraud reduction measure across all of the suggestions that I've given, people should have their tax-paying history and their banking history taken into consideration when assessing whether they're a fraud risk or whether the pattern of their activity has changed too much. HMRC, by definition, already has everyone's taxpayer information, and through open banking, everyone can individually grant access to HMRC if HMRC chose to develop the capacity to demonstrate their banking activity over the past 1 or 2 or 3 years has fundamentally changed during the lockdown. So, for example, if someone has several consistent years of tax paying but then has changed job, and they've fallen through the cracks of the furlough or self-employment support schemes, but their tax-paying history shows that they have stopped earning, and their financial banking records shows that they have stopped spending and stopped receiving any income, that is evidence that they are genuinely in need of government support. Also, HMRC needs to release to MPs, and preferably to the public, the specific modelling that it's using when justifying these gaps in support. In the same way that MPs demanded detailed information and data about public health when they were asked to approve a second lockdown, MPs should be given detailed information about the short-term costs and the long-term costs of these gaps in support so that they make an informed choice rather than sleepwalk into a false economy. Finally, and most importantly, this crisis and this problem needs real leadership, right from the very top at 10 and 11 Downing Street. There should be clear political direction given from the very top to HMRC to say that yes, technical complexity and a high workload to solve these problems, that's very real, but it's a matter of national importance that those challenges have to be systematically addressed and overcome, just like we already did with the furlough scheme and the self-employment support scheme itself, just like we did with the Nightingale hospitals and just like pharmaceutical industry is doing with the vaccine. Just because something's difficult doesn't mean that we shouldn't do it. Now, I know I wouldn't have managed to cover every group in the excluded. I hope that this has helped people understand the breadth of the problem and the sheer scale of the economic damage that will be left if it is not fixed urgently. Please share this video with anyone you think isn't getting it. You can timestamp using the links below to the specific issue that you want to explain, and please use these specific actions as arguments to make when you're putting pressure on your MP. It's time for Boris and Rishi to put people before politics, fix the gaps in support, include the excluded, and finally make good on their promise that no one will be left behind.